Hey, welcome back. Imagine finding out that the recent growth of the Korean stock market rested almost entirely on, well, just two companies. Today, we are analyzing the outsized influence of Korea's top tech giants on the market and, how global shocks are upending retail investment strategies.
Right. It is a really unique environment right now. I mean, the data paints a pretty clear picture of just how concentrated the market has actually become.
Yeah, so according to the Korea Exchange and the Korea Listed Companies Association, KOSPI operating profits hit 204.7882 trillion won last year.
Right, which is a 25.39% increase from the previous year.
Exactly. But when you look closer, it kind of feels like a school group project where like two students did all the work.
Yeah, and everyone else just put their names on the title page. The numbers really back up that group project comparison, honestly. Because if you remove Samsung Electronics and SK Hynix, the operating profit growth for the KOSPI drops to just 10.76%.
Wait, just 10.76%.
Yes. And together, these two companies make up 13.97% of KOSPI's total revenue, effectively dragging the entire index upward.
So that concentration is directly shaping financial policy right now, too. The Financial Supervisory Service just announced a pre-notice to allow single stock 2X leverage and inverse ETFs for the first time in Korea, launching as early as next month.
Which is a notable shift for local equities.
It is, but wait, why are they only allowing these products for Samsung and Hynix? I mean, if I want to use one of these new 2X ETFs to bet on Hyundai, I can't.
Well, no. It really comes down to risk management. The strict new rules require a stock to maintain a 10% average market cap on the KOSPI over the previous 3 months to qualify.
Oh, okay, and the top two easily clear that.
Precisely. Samsung sits at approximately 24.5%, and SK Hynix is at 13.7%. The runners-up, Hyundai and LG Energy Solution, are only around 2.2%.
Wow, so the math just completely locks them out.
Exactly. Regulators are being very cautious here.
That makes sense if you think of 2X leverage like, well, putting a magnifying glass over a stock. Every tiny price movement burns twice as hot, so you only want the most heavily capitalized companies under that glass.
Right. But while tech is carrying local equities, folks need to pay attention to the broader macro environment. Global geopolitical issues are really rattling currency markets right now.
Yeah, this is where we see how global conflicts ripple through local portfolios.
Yeah.
If you look at KOSPI ETF check data, a significant number of retail investors heavily bet on the won strengthening.
They did, but the Middle East conflict pushed the exchange rate to 1530.11 on March 31. Because Korea imports its oil and pays in U.S. dollars, higher oil prices mean selling more won to buy dollars.
Which naturally weakens the local currency.
It does. Consequently, the KWOOM U.S. dollar futures inverse ETF lost 5.61% over a month. Meanwhile, the Codex U.S. dollar futures leverage ETF gained 11.69%.
So that mechanism just completely flipped their bets.
It really did.
That dynamic explains why a strong dollar and oil shocks hit import-heavy economies so hard. But wait, why are domestic India-focused ETFs taking such a hit from the same global issues?
It is the exact same underlying vulnerability, actually. Based on Investing.com data, India's Nifty 50 index fell 13.26% over 3 months.
Really? That is a significant drop.
Yeah. You see, India relies on overseas imports for about 90% of its crude oil.
Ah, I see the connection now.
Right. So paired with a slowdown in U.S. IT spending, India's market is highly exposed to these exact global tensions and oil supply disruptions.
Much like Korea. As Korea unlocks volatile 2X leveraged ETFs for its biggest tech stocks, consider how these new local tools might react when hit by the unpredictable currency and oil shocks we are seeing right now.
Yeah, I feel like a complex situation for folks to monitor.
That's all for today's deep dive.
We'll be back with more insights.
You've been listening to the Korea Economy Brief, straight from the front page of Seoul Economic Daily. Thanks for tuning in.